Welcome back to another episode of the Richards Report podcast. This week I have an extra special guest. His name is Andrew Pridham. He is the founder and CEO of Moelis Australia, which is an investment bank. He's also the chairman of the Sydney Swans Football Club. We talk about starting an investment bank in Australia, growing it year after year and taking it public with an IPO so it's now traded on the stock market, and how that journey has been for him on a personal level. We touch on the business of investment banking and what that involves and how it compares to the other hat that Andrew wears, and that's being chairman of an AFL team. There's many similarities between business and football, but there's many obvious differences too, and we discuss both of these. As always, this podcast is for educational purposes only and doesn't qualify as financial advice. Individuals may hold positions in companies discussed. And fair to say, Andrew probably holds a fair position in Moelis Australia too. Show notes for this episode will be available on the Six Park website. Okay, with no further ado, I'm Ted Richards, you're listening to the Richards Report, and here is my discussion with Sydney Swans chairman and founder and CEO of Moelis Australia, Andrew Pridham.
You're listening to the Richards Report, where we will speak with investment experts from around the country. We will cut through the jargon to allow you to make more insightful investment decisions for your future. This is the Richards Report.
Hi Andrew, thanks very much for joining me today for the chat. I know that you're listening to this podcast a bit, so thanks for joining me.
It's a pleasure, Ted. I don't do anything other than listen to this podcast.
Any favourite episodes so far?
Look, I think they've all been good.
I agree.
All been good. Lindsay Tanner's was outstanding as well. That was probably the only one I've listened to.
Oh, is that the... No, surely.
No, I listened to them all.
And if you haven't heard the one with Lindsay Tanner, please get back and check out the back catalogue. Andrew, as I said in the introduction, the founder and CEO of Moelis Australia, which is an investment bank, other than a place where people work many long hours in an investment bank, and to be fair, they get paid fairly well too. I just want to break down what investment banking actually entails, because so many people hear about investment banking but may not know what it involves. So before we begin, can we actually take a bit of a backward step for listeners and break down some of the jargon, very briefly what some of the following are and what they involve. So let's start off with M&A.
M&A, mergers and acquisitions. So that's one of the core elements of an investment banking or corporate advisory business. So mergers and acquisitions simply refers to takeovers you often see in the stock market when one company takes over another company, or in the private markets when companies buy and sell each other, sell divisions. So that's what M&A is. Okay,
and something that I talk about from time to time, an IPO, which you've actually been through one recently. So can you tell us about that acronym?
Yes, everyone should go through an IPO. IPO, the acronym is initial public offering. So that simply means a company that is not listed on the stock exchange in the Australian context, lists on the stock exchange.
And something that we do hear about from time to time, and that's merchant banking. And what does merchant banking entail?
Look, the difference between merchant banking and investment banking really is in large part historical. Merchant banking really came out of the UK. So a lot of the banks originally were funding merchants, so they were called merchant banks. In the American terminology was really investment bank, and as usually happens, the Americans win. So we've ended up with investment bank. But merchant banking...
Well, they didn't win with the metric system. I think, they're still working away there through the imperial system.
Yes, I guess inch by inch they'll get there. I think, look, there is a difference in the sense that merchant banking tends to be used with reference to businesses such as ours. We're probably more a merchant bank than an investment bank in some ways, and the difference being merchant banking involves not just advising clients but also using your own balance sheet and investing in businesses, and whereas investment banking is historically more advising clients.
Good insight there. And for the last one, can you just tell us a bit about your Bitcoin department?
Look, it's fantastic. It's going really well. It's going really well. Now, I'm not a big believer in Bitcoin.
I didn't think you were.
No.
Neither am I, for that matter.
No, I don't. There's a lot of things I believe in, but I don't believe in Bitcoin or that all the grand finals should be at the MCG for the rest of the eternity. So the two things I don't believe in.
Okay, well, there we go. No doubt you're very busy, but before we move on, you had a joint 50th housewarming and wedding, which I was very lucky to get an invite to and attend. And I've always wanted to know, was this because you're so busy and you needed to combine the three of them, or was it because you're such a smart businessman and it was such a great way to save on catering? Can you elaborate there?
I think the latter. Entertainment's very, very expensive.
You did have a good band that night.
We had two good bands. We had Enormous Horns and we had John Paul Young.
That's right.
And well, my family, my brothers and sisters, like all siblings, actually hate me, which is fair enough. I wasn't a good kid to them, but they loved the fact that they got to dance to Lovers in the Air. So I'm now a hero in the family. So it was well worth it.
Now, I don't know how old the listeners of this podcast are, but the reality is that Australia has been humming along quite nicely now for around 27 years since the last recession. And during that time, I know that there has been a little bit of volatility, but the stock market in the ASX has been performing quite well for a fairly long line too. And a lot of this has to do with us benefiting from the continued growth and expansion of what's going on with our neighbour in China. And where I'm going with this is, and I know it has been quite a long run up to this question, listeners in their 20s and 30s don't know what a recession is like, or may never have been invested in the market in an actual market crash. So what's it like being in the industry, whether it's investment banking or merchant banking, in the positions that you've had when you've gone through a crash or been through a recession? Do banks like yours scale back operations? Do deals dry up? Or is it in fact a time when you're really busy because of all the consolidation with mergers and acquisitions going on? That's probably the longest question I've ever asked.
It is. Well, the good news is your listeners who are in their 30s are now in their 40s, so they'll understand the answer. They can probably tell me. Look, the economy, it's constantly having ups and downs, and I think it's always interesting when you read about, this is the lowest of this or the highest that this has been. It tends to be since 2016 or 2014. It's not, the cycles are pretty quick, and I think when you're living through them, as everyone does, you tend, at the time that they're occurring, you're acutely aware of them, but they move on pretty quickly, and you just get on with life. So when you're running a business such as ours, you have to be acutely aware of the cycles that we're in and what's going on around us in the economy. But also, if you're building a business long term, or you're planning long term, which everyone should do, you can't be spooked by volatilities in the market, because you'd never get anything done. Because when you're investing, in particular, making long-term decisions, there's going to be many ups and downs along the way. What we always look at is making sure that a client or our business has an appropriate capital structure. So if you take, if you look at that from the lens of an individual, that an individual's capital structure needs to be one that can sustain through any volatility, and that means interest rates going up, loss of a job, house prices falling, house prices going up, stock market going up, stock market going down. If you're highly leveraged, too highly leveraged, if your expenses are too high relative to your income, you're going to get into trouble, and there's no difference in business. So we've been through many cycles. I started my career in the late 80s, and then we had the recession around 1990, 1991. So I've been through a recession. I've been through the financial crisis. The market that we're now in today, with very, very low, historically low interest rates, is reflective of weakness in the economy, clearly. And I think that, but it's nothing like the GFC, it's nothing like the recession in 1991. So I think it's the times today, they're not the best of times, but they're not the worst of times.
Yeah, and I think it's appropriate, and it's good insight for people that are in their teens, 20s or 30s that may not know what it's like, and the fact that there's a bit of noise in the market right now, but there's always noise in the market.
There's always noise. There's always, if you read the newspapers, you can't help but be depressed, which is why I try not to read them. I just read the sports pages, and this year it hasn't been that exciting. But you need to be very careful, because it's very easy for naysayers and the doomsday theorists. They're always out there. They're typically louder than people who are positive. My overall outlook is positive. Markets go up more than they go down, and so I think if you can maintain a positive outlook, and as I said, your capital structure is robust, then you can survive the ups and the small ups and downs. Clearly, at the moment, with interest rates being so low, that is going to give the economy some stability, but we're also seeing, obviously, unemployment starting to jump up a little bit, which is a concern.
And at the time recording it, it's now mid-June in 2019. We just recently had an interest rate drop. So if you're listening to this at some point in the future, that it seems like it's on the cards. It might even be 1 or 2 drops in the future at some stage. Okay, now Andrew, QBE Legends game aside, you've always wanted to be a professional footballer. But where I'm going with this is, I recall that you actually retired when you were 35, like footballers do. In all seriousness, what led to the moment where you retired at 35? And in fact, how many times have you retired?
I've only retired once, but when I was 35, I had a shocking ankle injury. No, no. Look, when I was, I'd moved overseas.
And where did you move to?
I lived in London and then Singapore, and I was with UBS as the global head of real estate. And I'd been working since essentially when I was at university. I used to work, so I'd been working incredibly hard, and I can tell you, investment banking is not an easy profession. It's
not 9 to 5.
It's not 9 to 5. It's in many ways there's a lot of parallels to being a professional footballer, in the sense that it's all consuming. It's a contact sport. It's a really tough environment. And you get tired, and you'd know exactly what that's like. You get mentally tired, you get physically tired. And
I can't remember who said this quote. It might have been Morgan Housel, who was working at an investment bank. Someone said to him, if you don't come a Saturday to work, don't bother coming Sunday. And I just thought that was incredibly insightful. But and that's the lifestyle, isn't it?
Look, it can be. I think the business lifestyle of people has changed a lot in the last decade, in my observation, and that a lot of that's driven by technology, where you don't necessarily have to be in the office like you did many years ago.
Yeah.
You don't sit on the bus reading the Financial Review. You can read it on your phone. What am I saying? I've never been on a bus, but anyway, I can imagine people on a bus reading their mobile phone. But you don't need to spend face time so much. But in my role, for example, I'm thinking about business the whole time, and that it is tiring. You have to have some outlets, and one of the great outlets I've had the pleasure to be involved in is footy. When I get to talk to knuckleheads like you, it's actually a relief, believe it or not.
I agree. And we'll get to football shortly. How long were you retired?
So I retired back in 2002 when I was living in Singapore. And I left UBS and intended to come back to Australia and retire. And my only role I had was I joined the Sydney Swans board, and that was a great outlet. But I very quickly realised that I wasn't going to stay retired for long, because I'm not very good at sitting around doing nothing. I don't like golf particularly, and I didn't have any friends. All my friends were working, so I hadn't have anyone to play with. So I pretty quickly got drawn back into business, clients calling and saying, could you help me with this? Could you have a look at that? And then I was drawn into business, and that business that sort of just evolved, I can tell you completely accidentally, zero business plan, was acquired by JP Morgan. So I was at JP Morgan for 7 years or something like that, before I'd really had enough of working at a big global bank. I'd done it my entire career, and I wanted to do something a bit different, and that's what's become Moelis.
Sorry, what year was this that you started it?
2009.
Okay, and then fast forward approximately, 7 or 8 years, you took it public with an IPO, and for listeners, that's where it becomes, like Andrew said before, that's where it becomes listed on the stock market, and the share price responded so well by the market. How was that, not at a financial level, but at a real personal level, because so much hard work and sacrifices had gone into it for so long, and then to see this little venture become so big?
Yeah, look, there was a point where we reached $1 billion market cap, and it was, it's been, and I'm someone, I always say I don't look in the rear vision mirror very often, if at all. I think you've got to look forward, but I guess it gives a lot of satisfaction that something you've started, you're one of the first employees, obviously, to see how much it's grown. It at times can be a bit overwhelming at a personal level, because we now have 190 employees. We manage $3.7 billion of assets, and so we are responsible through various business interests across many industries and asset classes. We're employing thousands and thousands of Australians, and that to some extent that is quite challenging. And I think about the business 24 hours a day, 7 days a week. I think about the people who work in our business. It gives great pleasure seeing, particularly the younger executives, develop, and they come in and they're pretty green, and they, you see them learning, you see them improving, and the pleasure they're getting out of it, even not doing things that perhaps I'm pretty sick of doing.
Yeah.
But that's the joy of it. But it's also a stressful occupation, because you are responsible. You're a custodian for other people's money, and you're making decisions and advising people and on things that are very important to them, involving a lot of money, and it's something you've got to take really seriously.
You've already touched on some hard times, but can you tell us a bit more? Because running a business is not always smooth sailing, and I might have said that you started the business 7 or 8 years ago and took it public, but I'm sure that going back 7 or 8 years, you could very well have easily taken a prestigious position at another investment bank where you don't have to worry about the things like hiring, firing, Christmas parties, broken printers, which I'm sure was part and parcel early days of setting up of Moelis. So, but you took all this on, and being founder and CEO, so much falls on your shoulders. So I guess, can you share with us, what have you learned over the last 7 or 8 years from starting Moelis?
Look, I think the lessons you learn in when you're managing and building any business is that things don't go in a straight line. You don't have the graph in the annual report that shows that revenues, profits go up every year, every quarter. It doesn't happen that way. There are ups and downs. You have disappointments with, you may hire somebody who doesn't work out, and you have to deal with that. That can be very, very stressful and disappointing. You may make investments here and there that don't go well. Nothing, you never have a situation where everything's going well at the same time. But again, it's progressively getting better, doing your best, being very focused on building for the long term, and that's very much culturally what I try and instill in the people here. And we've got a very strong team of people, senior people who've been with us for most senior people have been with us for 10 years now, since we started. And culturally, we're all very aligned, and we do think long term. We don't think about short term events. We're focused on the long term, and culturally, I think one of the most important things I've always tried to instill in our team is that our staff don't come first. Our clients come first, and the staff come second, and our shareholders come before the staff as well. And if the shareholders aren't doing well and our clients aren't doing well, the staff aren't going to do well. But hopefully, if the clients are doing well and the shareholders are doing well, then the staff are doing well. And the fact that the executives own more than 40% of the company does create great alignment. So it's easy to actually deliver that focus.
Before we move on to football, the last question I want to ask about Moelis is that it's grown a lot in the last 10 years. How has it been from managing Moelis as a private company compared to the public company that it is today?
Look, being a public company is, particularly in the regulatory environment that we're in today, the focus on continuous disclosure, etc., it certainly increases the pressure. But the discipline for us has always been there in terms of our financial reporting, because we've, from day one, we were fortunate enough, very fortunate in fact, have a 50-50 partnership with Moelis and Company, which is a global investment bank listed on the New York Stock Exchange. So we've always operated very much as if we were a public company. So things change as you get bigger. The biggest thing that changes is you have a lot more people, and the business becomes a lot more complex and diverse, which is good in some ways, but in other ways, you then start some of the administrative things that you don't like, which when you have a small business you don't have to worry about, you suddenly have to worry about.
Moving on to football, running a bank versus running a football team, being chairman of the Sydney Swans, but they're both very competitive industries. But are they similar or are they different?
Oh, look, there's always some similarities, but I would caution anybody, if you are out there in podcast land and you support an AFL team or any professional sporting team, and if you hear their chairman speak and say that managing a football club is exactly the same as managing a business, I'd be very worried, because it's not. It's completely different.
Is one harder than the other?
They're just different. I think it's harder managing a business in the sense that I think if you're the chief executive of a business, it's probably harder in many ways than if you're the chairman, because you're actually on the tools far more than a non-executive role. So obviously at the Swans I'm chairman, so I'm non-executive, so I don't spend as much time in the minutiae, whereas in our business I'm all over the minutiae, and I have to be. So they're very different. They're very complementary for me. I found my role with the Sydney Swans is a great outlet, because there's far more humanity in sport than there is in investment banking, I can tell you. As I often say, shareholders in a business sense, they're only in it for the money, whereas at a football club, supporters and members, they're in it for passion and they love the club, through thick and through thin. To some extent. Although when you're losing, I do get more letters than when we're winning. So if you're a Sydney Swans supporter out there, please send me a letter when we win saying how good that was.
Well, when you're playing full back, you also get a bit of feedback from the crowd too in the goal square.
Ted, when you were full back, I shielded you from many a supporter's letter.
All right. Okay, I want to talk about your positions and planning in business compared to football. As games are week to week and financial analysts look quarter to quarter, and I'm not talking footy games here, I mean as in every 3 months. So as we touched on before, they're two very competitive industries, but I guess your job at both is not to worry about what everyone else is focusing in on, because everyone's worried just about that little next game or that next quarter. What do you look further ahead in? Do you look further ahead in investment banking, or do you look further ahead in football?
I think that's one of the things that it would be relatively similar. You've always got to look a long way ahead, but you have to perform in the short term. So it's there's a conflict in those statements. But if you're not performing in the short term, then often you don't get the opportunity to be performing in the long term.
True. Although in AFL you can't be relegated.
You can't be relegated, but you can get to a position where it's very hard to get yourself out of the position in football. Where if you get into a spiral of failure, the finances become more difficult. It's then more difficult to get the facilities, it's more difficult to attract players, it's more difficult to attract coaches, and therefore the finances get worse. So you can get into a spiral in football just as you can in business. And so you have to balance long term with short term, and I'm certainly not suggesting that all decisions you make in anything should be long term, because you have to think about the short term. But ultimately, if you're not making decisions with a really strong bias towards what is the impact of that decision on a long-term outcome, then you're going to make bad decisions, and you'd become very reactive. And I think anybody that's managing, whether it's football or a business, one of the challenges is to avoid all of the noise that you hear, and that's whether it's picking up the newspaper of the day, or people talking to you and telling you this or telling you that, supporters telling you that this player can't play, or whatever. You need to look beyond that short-term noise with a long-term vision. I think if you've got a long-term vision and you set out a path, a strategy that you're going to follow to deliver that vision, you will deliver it. And I think if you jump around along the way, you'll fail.
What hurts more? A Swans loss or a correction to Moelis share price?
Well, we haven't.
Be honest.
I don't. Well, I'm always honest. The share price I don't watch.
Okay.
Because to me that's part of the noise that I talk about. I don't know why. People say to me, "Why did your share price go down?" or "Why did it go up?" Most of the time, I don't know. Unless you've announced something specifically.
But you might keep an eye on the AFL ladder.
I do keep an eye on the AFL ladder, and I do keep an eye on key indicators in it, whether it's football or business. And the key indicators, I guess, in business are how is the actual business going rather than the share price. Because again, I often say internally, our job is to run the business. It's the shareholders' job to run the share price. And in a footy club, it's our job to run the football club, and it's the supporters' job to turn up and watch and be really excited. So I think a loss really hurts. I don't like losing at anything. If it's a loss to Collingwood, it hurts a lot more than a loss to anybody else probably. But you've got to look at things in perspective, and as long as even this season where we've had some really poor performances and poor losses, I'm very philosophical about it, and as long as we're developing, you can see the improvement in the team, in the younger players, and there's hope for the future, and you're actually getting better, then I'm not too bad after a loss, actually.
This podcast is brought to you by Six Park. If you're a regular listener to the podcast, you're probably familiar with Six Park. And now with the benefit of technology, Six Park is using technology to provide investment management to clients all across Australia. In May 2019, Six Park turned 3 years old, and full disclosure, as I'm a part of the Six Park team, well, it's been a really exciting first 3 years for us. Past performance is no indication of future performance, but I'm pleased to say that since inception, over the 3 years, the performance of our growth portfolio has returned over 35%. If you'd like to find out more, or to take our free risk assessment to find out your investment recommendation, then go to sixpark.com.au. Back to the discussion with Andrew. Moving ahead, Sydney Swans premiership player Mike Pike, he works for you at Moelis. When he played AFL, he wasn't allowed to kick the ball too much. Does he have similar restrictions at Moelis? For example, could be he's not allowed to use Microsoft Excel, but he's allowed to use Microsoft Word. Any restrictions for Pikey here?
Many. And as you'd know, as a former teammate of Pikey, you can give him as many restrictions as you want. Doesn't mean he'll follow them.
Yeah.
And you, as I know, I remember I know he was not allowed to kick the ball unless he kicked it down the line.
Yep.
And like all good ruckmen, I don't know whether they forget that simple rule, that it's basically just part of nature that ruckmen should not kick the ball, handball behind your back, Andrew Dunkley style, and that's it. Kick it down the line if you have to, and let someone knock it out of bounds. Pikey would get a rush of blood frequently.
Are we talking football here or in the office?
We're talking. I'll get into the office, but football's more interesting and probably funnier. And whenever Pikey would get a rush of blood, usually on the half back line, he'd try and kick sort of like an incision, a laser-like kick into the corridor to somebody who dared put their hands up and call for it. And it ended up in the hands of the opposition almost every time.
He was good at passing to the opposition.
He was. And the opposition were very good at scoring goals when he did it. And I used to, whenever that happened, I'd sit there and I'd say to my wife, it's going to be ugly for Pikey tonight. And nothing is different in the office. Pikey is given instructions, very clear instructions, in English. Of course, being Canadian, he sometimes struggles to understand our accents.
Does he fall back on some French from time to time?
I haven't heard him speak French. He can. I think he can speak Spanish. Spanish, yeah. Pikey has been. He's not allowed to use certain programs. There's no question about that. I frown upon him talking to clients without supervision. Occasionally he strays, but overall, I would say he's been an outstanding success. And it's a great tribute to him, to someone who, as a young boy, was thrust into playing professional sport in Europe. He's been a professional athlete for most of his life, so he's very disciplined, and he knows what hard work's all about. He's not afraid to put in the long hours and do the hard work. And the best thing about having someone like Mike Pike work for us, just like you, Ted, is that he's been brought up in an environment where he gets constant and real-time feedback, and sometimes that feedback can be pretty brutal, as you well know. In fact, there would be few footballers who would have had more brutal feedback than you. And he can accept it, and he doesn't collapse into a blithering mess, which some millennials can. He takes it on the chin, and he improves, and and so that's been, it's a tribute to him, or credit to him, that he's been able to do that.
Moving along.
He got a lot of feedback on his haircut when he was doing work experience here. He had a very bad haircut.
I find that easy to believe. Moving ahead, what do you think investment banking will look like in, say, 30 years' time? Every industry is facing disruption of some form. How might it affect investment banking?
Ted, the impact of technology generally and regulation in terms of disruption is enormous. And I've been in business in one form or another now for 30 years, I guess, something like that, close to 30 years. And it's never been more prevalent, and it's never moved faster. And so things change so quickly, and you have to keep ahead of it. I think technology is the biggest driver of disruption. It's probably a big driver in deflation within the economy. Things, it's cheaper to provide services. People operate differently, and for example, what Sixpark does in terms of robo advice, it's very much the way markets are heading, where you're seeing, for example, a lot of investors now being advised to invest in index funds, or to go to robo advice or industry super funds or whatever, where there might be a far more cost-efficient delivery mechanism for the returns that they're seeking. So that impacts everything we do, everything we look at. But I like to think, and I hope, despite all the disruption and the impact of technology, that good old-fashioned interpersonal skills and commercial judgment is something that has been consistent and won't change, into the future. That people still do value having personal contact with somebody and getting proper advice. And
on to giving back, which I know is important to you. Can you tell me about a recent initiative you did with a South Australian university, in particular Pridham Hall? Can you tell us a bit about that?
Look, I'm a big believer, in my family, big believer in, we've been extremely fortunate in our lives, in my life, and that good fortune has come, largely through circumstances and luck, being born into a great family in Australia, in Adelaide, which many of my mates would say it was actually bad luck, but I actually think it was good luck. I think it's important to give back, and I have been very fortunate in the education I received at the University of South Australia. It really set me up, and I'm very grateful, and the opportunity arose to give something back to them, and I've got a great relationship with the university and the leadership there, and I was looking for something to really demonstrate my appreciation of what I've achieved because of them, and the Great Hall project came up as an opportunity, and I discussed it with my family, and we jumped at it.
3 questions to finish, just some advice for listeners. Any advice for someone that wants to get into the investment banking industry? Because it could be hard to get your foot in the door into the industry.
Yeah, look, I think it can. It's like any industry, a lot of people get into it by accident. I really got into it by accident. I didn't even know what it was when I got into it. It just sort of, there was a job advertised, and I applied and I got it. I didn't really know what it was. So I think it's a very broad, investment banking is a very broad term, and it relates to, it can be asset management, it can be corporate finance, stockbroking, fixed income, foreign exchange. There's many areas where you can apply skills. I think if somebody's very keen to get into it, the main thing is to study the right courses and get an education, because more and more, when we bring graduates in, for example, into our business, we bring in something in the order of 14 a year, so it's a big commitment we have to bring in graduates. The educational qualifications they have certainly put me to shame. Most of them double degree. Very few of them in their HSCs are anything lower than about 98%.
Yep.
So they're high achievers, but they don't have to be Einstein to do well in banking. I'm not Einstein. Hard work and building relationships and networks, and if you've got relationships with people who are already in the industry, that's probably one of the best ways to find a path.
Okay, and any advice to someone that wants to be chairman of an AFL team?
Don't.
Because it's almost a full-time job in itself.
Well, it's not. It shouldn't be. And I think if you've got a really good executive, and one of the advantages I've had is that being a chief executive and also being a chairman, being a chief executive makes you a better chairman, and being a chairman makes you a better chief executive, because I know as a chairman when not to interfere, and I know as a chief executive when to get the chairman involved, so if that makes sense. So I think if anyone has any opportunity to get involved in something they have a passion with, whether that's sport or the arts or whatever it is, I think it's a really good thing to do. It gives you a lot more perspective on life, and it's an outlet. It's not the time. I've got plenty of time. It's the brain space that you really use up in business that becomes a problem, because your mind becomes full. And something like football is being chairman of a football club is a good outlet. It's very different, I can tell you, sitting at Marvel Stadium with the cheer squad watching a game, than it is sitting in a board meeting talking about P&Ls and balance sheets and all those sorts of things.
Okay, to finish, any books or podcast recommendations?
Well, there's only one answer to that. Have you written a book, Ted?
No. And I wasn't angling, but I'll take it.
Look, your podcasts I must listen to. So I would have to say your podcast.
Okay, any other ones apart from mine?
I'm not a big listener to podcasts. Occasionally people send them to me. Occasionally the odd audio book I'll listen to when they've been recommended. I share some, in fact, with John Longmire on various...
Could you share any of those with us right now? What does Horse listen to?
Well, there's a lot of good podcasts on the psychology of sport, for example. There's a lot of good podcasts on motivation, on dealing with anxiety, which comes with any high-level activity. I don't know anyone that's at the pointy end of business or sport that doesn't suffer some form of anxiety. So I think they're always very interesting to get different perspectives on things. There's a podcast, a book. I don't know if it's a podcast or a book. I think it's an audio book called Dare, which I thought was extremely good. There's some of the Warren Buffett type podcasts are good. Howard Marks doesn't do a bad one.
He's great, isn't he?
So look, there's all sorts of things. In terms of books, most of the books I read are with my 8-year-old, so you probably don't want to know about them.
I kind of do. I need some new books.
She can read better than I can. So.
Andrew, thanks so much for taking the time to have this chat today. Really appreciate it. And if you'd like to find out more on anything that we've spoken about, show notes will be available on the Six Park website. Andrew, thanks very much. Okay, I really hope you enjoyed this episode. Thanks to Andrew for giving up his time and the insightful chat. Some good takeaways about how to think about noise and volatility in the market, the importance of long-term planning when managing football teams, and growing a business and ensuring that the culture isn't affected as the business grows. A lot of exciting episodes in the pipeline for the Richards Report coming up, so make sure you subscribe wherever you get your podcast from. And if you think you know someone that would be interested in this episode, then I'd greatly appreciate if you share it with a friend. Actually, I'm all good even if you share it with an enemy too. Okay, that's enough rambling from me. See you next time on The Richards Report.